The next 11 days will decide if you look back at 2026 and say, yes, I was prepared. Or if you end up saying, I hesitated again. Because right now, we are at a turning point in the market cycle. In this video, I'll clarify two things. First, where we really stand in the current cycle, and second, which decisions build capital now and which might cost you the entire next bull run. Because whenever speculative assets collapse, they are declared dead. Small caps, penny stocks, and of course altcoins. The headlines are always the same: over, bubble burst, never again. But historically, the accumulation phase begins right here. So the question isn't if they'll return, but ultimately which assets and above all, when they'll return. At the end, you'll also get my clear assessment of the market structure, which one is crucial now and why most investors actually misinterpret it. Welcome to 10x Invest, your channel for honest and data-based investment analysis. But wait, a disclaimer, my channel is not financial advice, but purely informative. But first, let's look at the market phase and where we really stand. If we're honest, we're currently seeing the same pattern everywhere. Bitcoin down 50%, altcoins down 70 to 90%, small caps well below their highs, penny stocks completely imploded, growth stocks stagnating. But every market cycle ultimately consists of four phases. First, accumulation. Second, the uptrend. Third, the euphoria phase. And fourth, the downtrend again. We are probably in the downtrend right now. Low liquidity, high skepticism, little retail interest, especially in altcoins, capital is flowing out. But what comes after that is the important part, namely phase 1, accumulation. And this phase doesn't just affect crypto. We see the same pattern in the stock market. Institutional money stays in large caps, small caps underperform, penny stocks are illiquid. Historically, this is exactly the moment when long-term positions are built, but not aggressively or emotionally, but in a structured way. Because in this phase, the downside has often already happened, but the upside belongs to the next cycle. Let's move on to Trump and the Federal Reserve and why that's crucial. Many currently believe Trump plus the new Fed chair equals a bull run, but it's not that simple. On January 30th, 2026, Trump nominated Kevin Warsh as the new Fed chair, but Powell remains in office until May and Warsh hasn't been confirmed yet. The Senate is blocking it. There are allegations of loyalty and an open power struggle. This isn't a clear policy change, and uncertainty always creates volatility. What does Warsh mean for risk assets? There are basically two scenarios here. First, we have the dovish scenario. If Warsh actually pushes through interest rate cuts, liquidity would increase. A weaker dollar historically means risk on. At least that's how it was back in 2020. Liquidity is the fuel for altcoins, small caps, and of course, penny stock shares. But that's not guaranteed. And scenario 2, hawkish or political chaos. Warsh is basically considered critical of QE, that is, quantitative easing. He has criticized balance sheet expansion several times, meaning if inflation picks up again, it could even get tighter. But even more importantly, if the Fed is perceived as a political tool, markets react sensitively. Historically, Fed changes lead to 20 to 30% volatility spikes, and risk assets suffer first. Altcoins suffer more than, for example, Bitcoin, small caps more than large caps, penny stocks the most. The question now, of course, is also, why hasn't there actually been an altcoin season yet? Many ask, why aren't altcoins exploding? How do I see it? And the answer is actually structural. In 2021, there were around 8,000 coins. Today, there are over 30 million coins. So, liquidity is becoming extremely fragmented. 99% of them have no product of their own, no cash flow, no users. Institutional capital goes almost exclusively into Bitcoin and Ethereum, maybe Solana too. The Bitcoin ETFs are also sucking up capital. Bitcoin's dominance remains high. A broad altcoin season, like in 2017 or 2021, is rather unlikely under these conditions. Instead, we'll see something else, namely selective narratives, artificial intelligence, but especially real-world assets and infrastructure. Meaning, not everything rises, but only what has quality. Which decision to build capital now? The most important decision in this phase isn't which coins you buy, but how you invest. Meaning, your tactics, your management. Because accumulation isn't an event, it's a process. And processes always beat emotion. No FOMO and no FUD. In accumulation phases, pessimism, low liquidity, and sideways movement prevail. That's exactly what tempts many to either do nothing at all or basically put all their eggs in one basket. But both are wrong. I don't work with hope here, but I don't work with fear either. I basically work with probabilities. And here we come to DCA, that is dollar cost averaging, and why right now. In this market phase, I'm not trying to hit the bottom. I really distribute purchases systematically, weekly, monthly if necessary, with fixed contributions. Why? Because we're in this structural phase. We don't have a clear uptrend at the moment, but no panic crash either, rather a possible bottoming out. DCA ultimately reduces the timing risk. And it's exactly in this sideways phase that DCA historically works best. Not during the hype, not in a vertical rise, but during a standstill. Now let's look at the portfolio structure, the 80-20 principle. Capital isn't built through maximum returns, but through survival and scaling. That's why my tactic is 80% of my capital is in Bitcoin. Why? Institutional capital flows into Bitcoin first. Regulatory clarity affects Bitcoin first. Liquidity concentrates on Bitcoin first, meaning Bitcoin is the foundation. The remaining 20% goes into selective risk assets, quality altcoins, fundamental penny stocks. So, meaning no meme coins, no hype projects either, but only assets with a product, cash flow or real use, verifiable activity, meaning the fundamentals. And even there I work with small tranches. No going all in. What I don't do, I don't chase 50 or 100x fantasies. I also don't react to social media. I don't increase risk just because things get euphoric on social media, but capital is built through discipline, not through luck. When do I increase the risk? Only when the data changes. Falling Bitcoin dominance, for example, rising stablecoin liquidity, a falling dollar index, or a confirmed interest rate cut. Only then does accumulation turn into expansion, not before. If you don't want to leave this process to chance, but want to work with a clear system, then I've built a structure for that which might interest you. That's exactly why I've developed a simple but effective system. Completely data-based and without emotions, with my 10x formula and a clear master plan. A plan that can be applied in a bull market, but also in a bear market, where the biggest opportunities often lie. In the 10x Elite, you get this master plan in full, so you receive my complete investment plan until 2030 and beyond. But what do you actually get specifically, and how will it definitely help you? First, you get my latest penny stock analyses and hidden gems in altcoins from the low cap sector. So, exciting opportunities, analyzed based on data, with a percentage score at the end. This way you save time and ultimately benefit from my research work. Then second, data-based ranking lists. I have all the analyses in a ranking list of altcoins, but also stocks, rated in percent. Meaning, no opinion, just data. And then you have a clear comparison to see where the potential lies. Then third, I keep you regularly informed about the market, and that's without hype and without panic, but with a clear classification. This way you're perfectly informed about the market without having to invest much time yourself. Fourth, you'll get access to my 10x indicator. It's the core of my data-driven approach. The indicator shows on TradingView whether Bitcoin, altcoins, stocks, or even commodities are showing bearish or bullish trend changes, as well as exciting overbought and oversold zones. It basically uses green and red as colors. This way you can immediately spot exciting market opportunities without being blind. Fifth, you'll get insight into my portfolio, so full transparency, but simply as inspiration for you. Sixth, you'll get specific DCA or dollar cost averaging analyses, for example, to analyze the best average price for Bitcoin, but also for trading, futures trading, basically long and short analyses that I post there. And last but not least, you'll get access to my 10x Academy, where you'll really learn how to apply analyses yourself, how to recognize opportunities, how to understand analyses, and how to proceed based on data. So if you want to move away from speculation towards a clear data-driven system, you'll find the 10x Elite in the video description below.